what's going on? I'm Dan Keller. I'm a Washington State, making home affordable HARP mortgage banker, and I want you to come on in and let's talk about HARP real quick.
But since I came here, felt the joy and the fear, finding myself making every possible mistake. La 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 la.
Alright, so what is the Making Home Affordable HARP 2 refinance program? Real quickly in a nutshell, depending on wherever this video may be showing up on my blog, either above and below, I kind of talk about the HARP 2 program and more specifics. But real quickly, the HARP 2 program has two main qualifying guidelines. The first, your mortgage has to be secured or originated prior to June of 2009. And second, it has to be owned or backed by Fannie Mae or Freddie Mac. Now, like I said, either up above or down below, you're gonna find links that will take you to the Fannie Mae or Freddie Mac mortgage lookup page. Type in the address of the property, click a box, type in a code, and it will tell you whether or not the home is backed by Fannie or Freddie. Or you can just call me and I can look it up for you. It only takes a couple of minutes. So those are the two main qualifying criteria. There are two other things that I want to address real quickly in person so that you can understand. There's two things that have kept homeowners in the past with HARP 1 from qualifying. The first is private mortgage insurance. If you did not put down 20% on your mortgage prior to June of 2009, you have what's called lender-paid mortgage insurance or borrower-paid mortgage insurance. Under the HARP 1 program, a lot of homeowners didn't qualify for the refinance because of the tight guidelines as it pertained to private mortgage insurance. HARP 2 has loosened up those guidelines, so contact me directly and I can get you more information on the type of mortgage insurance you have and whether or not you qualify for the HARP 2 program. Now, the other thing that kept homeowners from qualifying was the loan-to-value limits, meaning how underwater you were. HARP 1 limited you at 105 and then most recently up to 125% loan to value. The HARP 2 program has zero loan to value restrictions, meaning you could be $200,000 upside down on your home and still qualify for the HARP 2 program. So down below, up above, more information. I wanted to address these items real quickly with you guys. The third thing, if you have an FHA or VA or USDA mortgage, you do not qualify. It does not fall under the HARP 2 guidelines. However, each one of those programs have similar programs to the HARP 2 refinance program that can help you. So please contact me for more information and I can get you some information there, okay? And lastly, I'm getting some really good questions from my readers and I wanted to address some of these questions on video. So stay tuned. Let me read a few questions from my local readers and hope you'll learn a lot from this, okay? Hold on real quick. Alright, so let's look at a few questions that some of my readers are asking. These are really good questions and I think I wanted to answer these on camera for your information. Okay, so Andrew from Tacoma, will my home require an appraisal with the HARP 2 mortgage program? Andrew, great question. Yes and no. Although your home's value doesn't matter with the HARP program, we do need to, lenders will require what's called an automated valuation model or an AVM. And in most cases, we're getting an appraisal waiver, if you will, on these homes. I'll explain it to you in further detail, but the appraisal does not affect whether or not you get the refinance on using the HARP 2 program. So great question, Andrew. Alex in Kirkland, do I have to HARP refinance with my current mortgage bank or lender? No, you do not. And what I'm recommending, that's a good question, Alex. What I'm recommending with my clients and my readers is that you refinance with somebody that knows about the HARP 2 program, like myself and my team, who can give you the best advice and structure it the best way that meets your financial and home ownership goals, okay? So another really good question, Alex. Lewis in Bellingham, what's the biggest mortgage I can get with a HARP refinance? Typically in most counties it's 417. Great question, but this is such a big question that covers so much space. I think you might want to contact me if your loan amount or loan is currently over 417. Contact me and I'll look up your address for you, okay? James in Gig Harbor asks, can I refinance an investment or rental property with the HARP 2 program? Yes. Great question. Yes, and we're seeing some amazing rates, taking people from literally 7 and 7.5% down into the low fours on their rental or investment home. So very good question, James. Another good question from Anita in Linwood. I am unemployed without income. Am I HARP 2 eligible? Anita, yes you are. You do not need to be employed using the HARP 2 mortgage program. Applicants do need to be requalified, okay? So great question. Contact me if you have any additional questions on being employed and qualifying for a HARP 2 refinance. Brett in Mill Creek. Is there a minimum credit score used to the HARP 2 program? Great question. No, we will pull your credit. We do need to pull your credit, but no, there is no minimum credit score. Lenders may have overlays, but for now, no minimum credit. Great question. And lastly, I think this is a really good one. Matt with John L. Scott Real Estate asked about rates, the rate question. Rates right now are very, very close to conforming 30-year fixed interest rates. Okay, you can get a 15-year and you can actually get an ARM with the HARP 2 program, but rates are very attractive and very close to conforming interest rates. I'd recommend, because rates change on a daily, minute-by-minute basis, that you contact me for an instant rate quote, free, no obligation, and go from there. But hey, really good questions from our readers. I'll keep answering them, keep coming them, keep shooting them at me, and contact me if you have any questions, okay? Take care, guys.